Hello family. I want to bring you back in here because our last episode we was looking at XRP. We showed you how we was able to identify the waves, and then we put our Fibonacci extension tool, a trend-based Fibonacci extension tool is what it's called. Trend-based Fibonacci extension. We was able to create that and use that and plotted it off of this first wave. Now, if I wanted to adjust that, I can look at this red candle here and say maybe that was a wave, but because I'm seeing how this red candle was contained within the previous green candle, it really was not much of a downtrend or a down movement. It was just a pause as this continued. So we used that as the wave. When we did that, we said when we are looking at a longer term move, each of these candlesticks represent days. So it took, after wave one was over, it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16 days for it to have to reach the top of its fifth wave. So that big movement was a 16-day once it reached this first wave was over. Okay? So sometimes you're going to take long. So if you're going to be in the market running a trade for 16 days before you cash out, then you can use this tool and just draw it off of your first wave. If you believe the price is trending, you created a wave and you waited and price moved above that top of that wave. Then you start plotting where the price should go if it continues to go up. That's what you do. Okay? And you look for confirmation. You don't just jump in the market, but you at least use your tools to help guide you to make better decisions on entry and exit. All right, so now, since we did that, we was able to plot and very easily saw how the market went directly to our 2618 fib extension point, which I often see as the end of a 5-wave movement. And that 5 wave could be one wave in a larger time frame, but at a smaller time frame, it manifests as a 5-wave movement. So that's a sign that the market is trending 5 waves. So we saw it in this time frame we're looking at in the daily chart. That was a nice little movement, and therefore we ran it. And now prices have gotten to a point where it's no longer going higher. We looked at our RSI, and all of November, after the election, we have been in this overbought area, and now RSI is approaching falling back below 70 to get back into the range, which is what happens when the market retraces and corrects itself. We call correction when the buyers who was previously buying decide to take profits off the table. The market is going to adjust because those buy orders gets reversed with sell orders, and that puts selling pressure on price and forces price downward. And when that happens, it's shown in the chart, and RSI also picks that up and starts falling down, and we can see that. And so because we got there, we want to say, all right, we know XRP is a good coin to have, and it has some great future potential. But right now, in this short term, we want to know, is now a good time to get in? It came up and it fell and it started to go back up again. What should I do where we are right now? How much farther is this thing going to fall, or is it going to keep going up? That I can't tell you exactly. But what I can say is, if it confirms that it's going to fall below this low point here, then I will start looking to see where it will go to based on some tools that we have. This blue line, this horizontal line right here, would be a good cue to let you know where price very well may go to, because that's where price bounce in the future. In the previous video, we already saw that. So we drew this line to let you know a key area of resistance or support that now we, in the future, when the future arrives where we are now, we can say, okay, this becomes an area where we can expect price to at least bounce if it continues to fall below this, below this. If it falls below this red candle here, the last red candle here, it stopped before and buyers bought it and pushed the price back up. Now sellers are back in the market pushing the price back down. Let's see who's going to win this tug of war. And if the sellers win and the price goes below our 1618 area on this particular chart here, then we can look to go here. But let's remove this right here for a second, and let's take a look at how to estimate where price would go if it falls. And to do that, we will use a Fibonacci retracement. Retracement means it's tracing over territory that has previously traveled upward. In this case, in an upward trend, when the market retraces, it goes back over those price areas that it previously just reached up. And that's what we're looking at. So we're retracing. So what I'm going to do, we base our retracement on the wave. So I'm going to go to the bottom of this wave here and go to the top, the highest part of this wave here. And then I'll just take it and drag my chart across here. So I can use the chart. So price, as price moves, I can have these lines to tell me where I think price may go. And this horizontal line that we created before is very close to this 618 retracement level. A lot of times, if the trend is still upward, it can go down to this 618 before it bounces and go back up. And in extreme cases, it can go down to the 786 retracement. It can go all the way back down here. But once it gets down below the 50 part, now we are not sure whether the trend is over and it's been reversing or whether it's going to go back up. So as it begins to fall, we have to wait where we get confirmation that it cannot fall any further before we start thinking about buying. Because until you get confirmation that the fall is over, you're taking a risk of getting in the market just to see the market run away from you and not in your favor. So you want to try to avoid that if possible. And so this tool tells me that we've already retraced to this 382, which is a good area. When the trend is strong, it will go here and bounce. And that's what it did. It went there and it bounced. But it lost steam before it could get back above this point right here, at least momentarily, because we had this day that was which was the down day, but it was more an indecision day. It closed almost where it opened, but it spent most of the day downward. But by the end of the day, the buyers came in, pushed the price back up to where it opened. And so this was an indecision day. Okay? But we do know selling pressure existed. And so when the next day came, which is the current day, that selling pressure resumed and has pushed the price down to this lowest point where the bottom of this candlestick wick is. But buyers came in and momentarily is pushing the price back up some. See, it's a tug of war. So we have to wait this out. If you try to time the market or run ahead of the market, you could be oh so wrong. This market, something could happen that could cause price to go way back down to the 60 something cents range. That's possible because we saw that happen in the previous video where it hit some all-time highs, but it fell right back down into those previous low rate ranges. So that's possible. So we don't want to try to play the guessing game and run ahead of the market and get in the market just to see the price run and run and run. And you get to a point where the pain becomes so hard that you close for a loss. So to avoid that, wait until you get confirmation. What is going to be confirmation? It's going to come down here. It's going to bounce. It's going to try this again. And when you see that it cannot break below whatever the level is that it bounces off of, And I'm seeing this when you see these two lines right here, this the longer horizontal line, and my Fibonacci retracement tool is right here. I would imagine this would be a strong area to hold price. You see that? So when you see what we call confluence, more than one reason why price may bounce, that's what a lot of people look at that. And when price gets here, a lot of people will kick in and start buying it. And that's what would keep it from falling below this. Because thousands and hundreds of thousands of people maybe looking at the exact same thing. And so they're seeing the same thing. And so when price gets in this area, more than likely it's going to bounce unless there's some kind of news that hits. Maybe some whale or something came in the market and just unloaded XRP by the millions of coins, then that could really, really push the pressure into a selling frenzy, and the price could really fall below that. But I'm seeing that this market is primed to be a good bullish market for probably for the next, at least next year. We got to see what's going to happen with Donald Trump. You know, is he going to be frustrated in his office, or are the Republicans going to be supportive of his cryptocurrency agenda? If so, we know the market is going to be moving really well. And so we're not looking for XRP to really fall too far because January is right around the corner now. President Biden's on his way out. Donald Trump is coming in. So I'm looking for prices to really be juicing up. Okay, so that's what I want to know. So now we found out where we can expect price to go to. If price goes to this region here, I would be willing to buy at this point because I see that this price, even when this was going up, you can see prices stopped right there momentarily, pause momentarily. So now I'm thinking that might be the bottom of this third corrective wave, which fell below the first wave, and then from there start going upwards. And if that happens, we can put another chart here. Let's put another estimation here, an extension. Let's say the price goes from where it is now down to here. So let's say price goes from here down to this bar here. Okay, let's do it the other way around. Let's say it's going to, let's say that the price, I got to get this okay. Let's say that the price bounce from this line here. Let's say it bounces from this line and goes up to this line. Let's put this back in its pocket and drag this across the top of that right there. What this is showing me now is where prices may go. Now you see our 5 wave target point is at $3.71. $3.71. If the market breaks back above this, based on this wave right here, it has $3.71 target where it can go. It has a $3.07 immediate target. The blue line, which is 1618, but the 2618 goes up a little bit higher by the tune of 70s, about maybe 70 more cents higher per coin. So that's what we're looking at right now based on if this current price falls down to this region here. Wait, make sure, do we put our line down there good enough? Our lines, yeah. Okay, so the lines have to be proper. All right, so if it goes there, now we can see we have look like a $4 price. if it gets this close, it might just tip up to $4 because, the market also likes round figures. So $3.91 close enough to $4, so it might hit the $4 before it bounces back and then start falling off again, trying to find traction before it can keep going higher. So you got to know the market will move like this because it's done that before. You see, it stopped, it went down some, went up a little bit more, it stopped, it went down some, went up some more, it stopped, it went down some. This is the way the market moves. So you got to be able to understand that, because you might have this projection that XRP is going to eclipse Bitcoin and all that, but it has to get there by the way the market moves. Unless there's some great, tremendous news that hits the market where this thing is going to immediately just jump, catapult, dire, just really go real, real big, then it's going to get there by the way the market moves. All right. And so that's what I want you to see. That's what I wanted you to know. And so we got to keep an eye on this right here. Price is expected to go, in my opinion, it's expected to go back down to $2 before it goes back up above this $3 range. So that's what I'm looking at. But I could be wrong because I don't know. See what's the tensions that's in this market right here, right now. What would trigger it? Because we are still overbought. So the market is still needing to correct itself from this overbought condition. But it doesn't have to. There's no 100% guarantees. But what we do know is with high probability, by hours and hours of studying and thousands of bars and patterns, we get to see certain things play out over and over and over again. So when we see certain things, we expect those things with high probability. Not 100%, but high probability. So let's keep this under wraps. Now, one more thing. If price bounces up above this point right here, then we know pretty guaranteed it's going to retest this high. So that's what we need to keep in mind. If price can be contained in this area and find traction and get above this area right here, $2.62, it very well could target our $3 range and maybe beyond, depending on what all is going to follow that. So that's our projection. That's what we're looking for now. Hopefully you've taken notes and keep looking at the charts and see how well this plays out. Talk to you next time. Bye-bye.